KSCI, TV 18, San Bernardino, Los Angeles, San Diego.
Hello, welcome to Money Talk. I'm Arlo Cederberg, your host, and today, well, we're going to discuss a couple of things, many things as a matter of fact. We're going to discuss investment books, and we have an expert in that, and then we're going to discuss the Gann theory with both our expert in books and with Phyllis Kahn, who's an expert in it, Dr. Jerome Baumring. He's a partner in the Investment Center, and that has how many books now, Jerry?
Well, right now, the Investment Center is proud to say we have 5,000 books in our private library, and right now we probably have, I'd say, somewhere in the order of 20,000 books for sale, open to the public.
Mm-hmm. Some of them, I understand, you won't sell.
No, there are certain first editions that are extremely rare, such as Samuel Benner's Prophecies, which is a very rare book, first written in 1859. We have some of Gann's finest works, which is the Wall Street Stock Selector, a very rare issue. You then go into books, Hamilton's work, Stock Market Barometer, Thomas Gibson's works, his famous letters of 1907 and 08, his charts of 09. You then go into something by George Cole called Graphs and their application to the stock market, and many others that are just too rare to be ever repurchased.
We can't go into them all, but you've got a list here of investment books, both for commodity investments and for stock market. I noticed some titles on there that I think most people that are acquainted with the stock market know, like Burton Crane's Sophisticated Investor, Graham and Dodd, of course, that's a classic in security analyst, called Security Analyst.
That's right, the Bible.
Mm-hmm.
There's a lot of books that we have made up a nice list for any viewers that would like to write in to either the station or to the Investment Center. We call it the Model Library, and we'll be glad to send you a list for both commodities and stocks that list about 2 feet of books, which we feel that every investor should have.
Okay, we're going to put up your address later so they can maybe write directly to you about that. There's some books, some classic books I love. The one I love.
A classic. People think about manipulation. Look back to when Daniel Drew was alive, and you really have the manipulators really at work. When you had the days of the bucket shops, where when you went in there, you might as well just put your money down and hope for red or black. It was just about the same. Today, when people look at the specialists and they claim the specialists up to all this evil, well, before you used to have pool operators really at work, and they would drive the stock price up, drop it rapidly on you without any forewarning, and you can be very, very injured in some of these market movements. Well, today, since the Security Exchange regulations came about in 1932, our market environment is totally changed. You don't have pool operators able to manipulate the markets as you did prior to the 30s. And you'll find out that stocks don't move as rapidly as they did, let's say, in the 20s, when you had this great bull market, one which we have yet to see the likes of. When you consider that the bull market that began in early 1924 and culminated in 1929 spanned 300 points, but the increase on the base that it started from is really the significant factor in that it had a 6-fold increase. Now, since August of '82, we've seen the Dow go from 770 to 1290. Sounds impressive, big numbers, but when taken as a percent increase of the base, not anything to compare with the 1924-29.
You know, going back to Drew, he was always on the short side, and remember that if he didn't have the stock to cover, he'd print it.
Well, now, Daniel Drew was an interesting fellow. He decided he was going to get control of a railroad. And how he decided, well, how am I going to do this? He waited for the boys to need money. And where would they go to get money? Daniel Drew was right there to give them the money, but on one condition. I want a piece of your railroad. I want to be an insider. And sure enough, Daniel Drew gave him the money, became an insider. And what's interesting, as the railroad line started to disintegrate, who did they blame? Poor Daniel Drew. He had all the money, and here the lines were in total shambles, total decay.
He was a great rationalizer, too, as I remember.
Daniel Drew looked after Daniel Drew.
By the way, I wonder what a fellow like you with a degree in organic chemistry and pharmacology, what are you doing with an investment bookstore?
Well, I practiced pharmacy for some 10 years and decided that the world of finance offered far greater challenge. It really offered up the chance to go as far as your knowledge could take you. It's what the American way is built on. That if you have the will, the desire, and the perseverance, you can go to any lengths of possibilities you want to. And when I first became acquainted with W.D. Gann's theory, I decided this was a ticket to success.
Okay. Gann is your idol, your hero. He's the man as far as you're concerned?
I feel that W.D. Gann is probably one of the founding fathers of technical analysis. His whole concept is, in summation in one word, total awareness.
Okay, we're going to ask you to explain that when we bring Phyllis Kahn in, too. We're going to ask her to explain it. And try to think about this. Try to explain that in a minute or less. I know you can't, Jerry. Maybe you can. And we've been on here with Dr. Jerome Baumring. He has the investment center in the Los Angeles area, and he has his stack of books, 2 feet of books on both sides that he'll offer, send you the best ones if you want to write. We'll have his number up later. And joining us after the break will be Phyllis Kahn. She's a Gann theory analyst. Usually is. All right, we're back here at Money Talk now, and our guest is Dr. Jerome Baumring. He's a partner in the Investment Center. We were talking about all kinds of investment books, and we were talking about Gann theory. Now we're joined by Phyllis Kahn, and she's an expert in the Gann theory. And Phyllis, I'm going to ask you later on to explain exactly what that theory is. But first of all, does it work better for stocks or commodities, or does it work for both?
It works equally well for both.
Does it?
There are some differences because stocks don't expire the way commodity futures contracts do, but the principles are identical.
Yeah. Yeah, Jerry, do you agree with that?
I agree totally. The only trouble that I'd have to say is the one difference, stocks move more slowly and commodities move far more rapidly, so that where in dealing in stocks, you can have the opportunity to get out of harm's way a lot faster. Commodities leverage either work for you or against you.
Who was this fellow Gann, and what did he do?
Well, I think I'll defer to our kind lady first.
Well, Gann began as a stockbroker, and his first efforts in the market were very disillusioning, as they are for many people, and he decided that this was not for him unless he found out how the markets really did work, because all he saw were people losing money in the stock market.
Yeah.
So he took off many years to study what the causes of price fluctuation were, and when he came back to the market, he came back truly as a master trader through his own research studies. He was a brilliant man.
I don't doubt that, but could he explain what he had in mind to people like you, and I'm obviously to you, but to the public in general?
Well, at the time, he probably could have, but he didn't desire to.
Okay.
It wasn't until he reached middle age and he was mellowed out with all the years of success that he began to write books and courses talking about the methods and explaining the techniques so that other people could do it. But in the early years, he was extremely secretive about what he did and talked in generalities that wouldn't help you at all.
Some of these books you got on your list, of course, are his books, Jerry. And does he explain really to the public what his methods are now if you study these books?
Yes, in 1923, he first wrote his first book, Truth of the Tape. And in it, he gave what he believed would be his first basic rules of stock operation. He looked at it and told you about exactly how to work in a well-ordered discipline, placing your stop losses at definite points, limiting your losses to a certain percentage of the capital you're working with. Also, he looked at it and told you how to always go with the trend and how to determine what the trend of the market was. He's most known from his article with Richard Wyckoff in 1909, where his successes already became quite obvious, and as a matter of fact, he predicted that on a certain date, soybeans would sell at $1.20. At 12 o'clock that day, soybeans were selling at $1.08. Everybody thought, no way, this man was ever going to be true. Needless to say, soybeans that day closed at exactly, not one tick higher, $1.20.
That's all well and good, but both of you, I don't understand how he could predict these things. Is there any way either one of you can tell me that?
Well,
30 seconds are left?
No, no, I'm afraid not. If that were true, then we'd have a lot more experts on our hands.
Yeah.
His methods are mathematical, and they range from the very simple to the very complex. And of course, they can't be summed up in 3 sentences.
Yeah.
But they are mathematical, and they are 100% technical. And they deal with the geometry of price and time in a general way.
Okay.
Phyllis, let me add one thing.
Yeah.
I think there's a lot of misconception about Gann theory that could be simplified in this. No one part of Gann's approach to market analysis is the total.
That's true.
It is everything when taken together, i.e. the parts being the summation of the whole, provides the answer to the whole. So that if you try to look at Gann analysis with just angles, support resistance, mathematical points of forces defined by Faraday, no one aspect will give you the answer. You have to look at the time factor, the price factor, its uniqueness in terms of when it shows highs and lows, how far from the distance between bottom and top, so that it isn't really just a single aspect that would be, shall we say, termed Gann.
It is not easy, is it?
I think there's a lot easier ways to make money in the market.
Yeah. Okay,
Well, I would agree 100% with Jerry that Gann's methods are holistic. And you can't really take just one segment of it and say, I'm using Gann. Some of the methods are so complete that they do stand on their own. And many people, for example, use one little Gann technique for day trading, and it does work, but that's not trading Gann. And his work has so many levels of depth to it, but the whole thing is truly the Gann method. And there are those who take what appeals to them and their trading philosophy and take that little bit and say, I'm using Gann.
Do you think it's, would you describe it, Phyllis, as theory or as science?
Well, all things related to trading have a little bit of art in them. And you have to realize that in the end, the conclusion that you come to is subjective. It's not like a computer program is spitting out a sheet saying buy here, sell there. You have to make the subjective conclusion. Now, it should be that all people using the same methods should come up with the same answers, but very often people's egos or health or a million things can get in the way with this subjective observation. So in this way, you can have differences from time to time, but they're based on the analyst, not on the method.
Remember, Jerry Elliott with the Elliott wave said, well, this is a great market theory or scientific fact I have here, but it's mine, and don't try to use it because you're never really going to understand it unless you really study it. Is that true with Gann, too?
That's very true. In order to understand Gann, you have to study all the parts. Example, Elliott and Gann were known to have had numerous discourses about wave theory. And where Elliott said that there could be 5 to 7 waves, Gann had a little different answer. He said that each movement of the market was defined into sections, and that most market movements either terminated in the 3rd section or the 4th section. And in the one extreme case, the bear market of 1929 to 1932, you had 7 distinctive sections in that market. Think about it a minute. Elliott wave analysis has the same thing. 3 sections, 3 waves, 5 waves, or 7 waves. So it's just a matter of what you describe as a section or a wave. Describing a wave is tough. A section is nothing more than a major swing high to a major swing low. A lot easier to define.
Okay, we're going to take a little break here, then we'll come back with phone calls on the Gann theory and other things. Maybe you can talk about commodities and about stocks in general and how it relates to it. So we will be back here on Money Talk very soon with more on the Gann theory. Stay tuned. We're back now on Money Talk, and the subject is the Gann theory. Our guests are Phyllis Kahn, who's an expert in that theory, and Dr. Jerome Baumring, who has a bookstore, but he's also an expert on Gann theory. So let's take your calls right away. Hello, you're on.
Hi, this is Peter from New York.
Hi, Peter.
Hi. I know that Phyllis has been bearish in the stock market for a while now. What I would like to ask both your guests is how low do they feel that the Dow will go before it bottoms out? And my second question is, do they feel that the bull market, which began in August of 1982, is over? Will we not see new highs in the stock market next year?
Okay. Phyllis?
Okay, me first?
You want to tackle that one first?
Okay, I'll tackle that one. On the very short term, I do have an objective on the Dow that could take it down to the summer lows, which were 1080, and a possibility of the 1030 level. When we reach that, and it could be as late as March of 85, I think that a new bull market could get underway, which may eventually take out the 1297 high. But for the time being, I think that we won't be taking out those highs until we reach some of the lower objectives. Jerry?
Is this total? I'll ask Jerry in a second, but I was wondering, is this totally on Gann theory? Do you use other things too? Do you use any fundamentals, for example?
No fundamentals at all,
okay.
no.
You can sit in a dark room with some charts and your books. And,
exactly, yes, in a cave.
Okay, Jerry, what's going to happen to the stock market?
All right. Now, the interesting question I'd have to look at is the choice of the starting date of the bull market is August of 82. If you look at the Standard & Poor's and go back to 1974, you'll find out that that is where the primary low was put in on the S&P. And according to Gann, bull markets have a tendency to run about 10.5 years. And if you look at where the top occurred on this current bull side, you'd have to see that it came at 1290, which is a very important resistance point. As Gann put very well, everything in life, according to Faraday, is mathematical points of force. If you look at July soybeans, they topped at 1290. Our current Dow has had problems at 1290. Where do I look for the Dow to go in the near term? Well, one of the things Gann pointed out very well is old tops will serve as future bottoms. Therefore, I'd have to look between the 1063 to the 1024 area to provide support over the near term. And I'd say no later than, I agree with Phyllis, February to March as my target date for that low point.
Did you say that you think, according to
So
Gann
we're in
theory,
agreement in time and price.
Yeah, you're both about on the same. But 1974, you say the bull market started?
If you look at the chart of the S&P, you will find out that your primary low did indeed occur in 1974.
So Gann says in his priesthood that
10 years,
we're about ready for the bull market to be over.
We should have started to go. But now, one thing to be very clear about, that distribution and accumulation are not short-term phenomena. You don't just make a single sharp spike top and then start dropping. Accumulation, distribution are long-term phenomena lasting months or years. We could stay at this level for 2 years and not violate any of Gann's principles.
Okay. Let's go back to the phones. Hello, you're on Money Talk.
Yes, this is John from Virginia. I'd like to speak with Phyllis on the matter that you just spoke about. Back on the 23rd of July, Phyllis, you had indicated that the break of geometric angles confirmed lower prices and that a break of 1080 suggested a move to 1030. Now, this, of course, is not a criticism, but what I'm trying to understand is what is the significance of Gann interpretation specifically? Does that mean that we are in a bear market? Does it mean, for example, or let me put it another way, what would cause you to change your current interpretation? Would a break above 1296 do it? Or alternatively, getting around the question another way, what exactly is the significance of these geometric angles?
All right, one of the many significances, naturally we can't deal with all of them in this brief period of time, but one of the conclusions that you mentioned that I've made on my broadcast is that the break of a geometric angle on a weekly or monthly chart gives advance information about what will follow the ensuing upswing. It gives you a clue to underlying weakness in spite of the fact that the market is able to stage a very spectacular rally. And that's one of the beautiful parts about the Gann work, is that you have this trend information very early from price activity, and yet the market can go in the other direction, which fools many people. So that those objectives that were there in July are still there now.
Okay, we got time for another call here before the break. Hello, you're on Money Talk.
Yes, Phyllis. My name is James Oakland from Baton Rouge, Louisiana. Last summer, you had on one of your broadcasts, you announced key reversal dates for the year. Do you have the key reversal dates for the year 1985?
Well, I do, but I don't have them with me. You remember on that show, we had some visuals where I had them all plotted out on a chart. But if you will write to my office, I'll be happy to send you a forecast in Gann Angles, my newsletter.
I sure would appreciate that. Thank you
Okay,
very
I'd be
much.
happy to.
Jerry, you got the four, what is it, Gann did 4 books?
Gann did 5 works in total.
Yeah.
He did the first, The Truth of the Tape, The Stock Detector, the Stock Selector, The New Stock Selector, The Stock Detector, 45 Years in Wall Street, and How to Profit in Commodities. And in his latest work, or last work, which would be 45 Years in Wall Street, he states that he was learning more and more all the time, and that he had been in the market 45 years and was constantly learning and felt that there was still much more to learn. Well, in '54, shortly before his death in June of 1955, he did his last piece of work in which he talked about geometrical angles as a very unusual method. He talked about them as measuring the pitch or the trend of the market, and that in breaking one angle, while you'd go down to another angle, it doesn't necessarily mean that you're going to go into a bear side approach from his earlier work. He said that could mean that you were just going to go into a creeping type of market, which later on could recover that motion, and which is pitch or trend, which are measured by geometrical angles, which are nothing more than moving averages. And later on, this could pick up its pitch or its speed of attack to the upside. So that while you say that you break one angle, in his earlier work, Gann said you could buy and sell against the 45-degree angle. Well, now, an interesting fact is, if anybody's ever tried it, that the scale factor will be a very important phenomena in determining what is your 45-degree angle. In his earlier work, Gann said it's 1 cent, $1 per box. But if you then work with other commodities, you'll find out that 1 per 1 is not always a 45-degree
I was
angle.
going to take another call, but we have less than a minute, so let me ask you this. Did he ever contradict himself in later works, his new discoveries?
When you say contradict, I would say no.
Yeah.
Did he learn new things that he felt would supplant what you'd already learned? Yes. He was constantly a student of the market and found that he had made, not should I say errors, but he discovered better techniques that would increase the value of his technique.
Okay, we're going to take a little break now. We'll be back here with Phyllis and Jerry in a very few moments on a Gann theory, so stay with us.
The information and statements made during Financial News Network's programming and commercial announcements are not to be considered recommendations of specific securities or the general market.
KSCI, TV 18, San Bernardino, Los Angeles, San Diego.
All right, we're back here now on Money Talk, and the subject is a Gann theory. We're talking to Dr. Jerome Baumring. He's a partner in an investment center, a Los Angeles bookstore that specializes in investment books. He's a Gann theory expert. We also have Phyllis Kahn. I'm sure you recognize her because if you watch FNN, she's on quite a bit. She is also an expert in Gann theory analysis. And let's go right to the phone here, and there's a lot of, the phones are all lit up. Hello, you're on Money Talk.
Hello, Arlo.
Hi.
This is Marge from Louisville,
Yeah, hi, Marge.
and I would like Phyllis to please define her terms of squaring time and price, and whether or not she recommends a new buying point in the March T-bonds here, and what the entry point would be. Also, the March D marks.
Oh, dear.
And how she likes May copper, and whether she's a bull or a bear, and where's the buy and sell point.
Okay, you have 30 seconds.
Oh, my. Well, I think we'll have to pass on the definition of the squaring of price and time. Suffice to say that when an important square is ending in price and time, you get a reversal in the market. Now, you asked about 3 markets. Where's the next buy point in the bonds? Right now, if you heard my analysis this morning, I believe that by the end of the week, the bonds, all of the financial markets are very overextended, and they may have a very strong correction. So I would not be recommending that you buy bonds at this time. I'd be recommending that you take profits. The metals right now, copper, are in a declining phase, and you asked about the D mark, and again, I made comments on that this morning that the precious metals and the currencies are coming down into what I believe may be significant lows, that the earliest would be around mid-December, the latest mid-January, but they're very important long cycles. So at the moment, I would stand aside. I would use some kind of entry signal so that if the markets reverse, you can climb aboard.
You know, I'm wondering, this is maybe too fundamental, but interest rates are coming down. You're still not recommending bonds.
I am not. One of the observations that I've made as a technician is that the very top of the swing in the bond, in the whole financial markets, always comes just at the moment in time when there's a string of good news items and the reduction in the prime, because it takes bankers that long to recognize the upswing, and by the time they do, it's over.
Excellent point. Let's go on the phones here. Hello, you're on with Money Talk.
Yes, this is Richard from Phoenix calling, and I really like your show. I have a question for your guests. What I was wondering is, when a stock is approaching the 45-degree angle, is there some criteria that will tell you which way that stock is going to go after it hits that angle? I've noticed several times in my work where it's approached the angle, and then it's penetrated that angle, and then went through it again. And it seems to leave me a little bit baffled.
Okay, maybe.
I'd like to know, when you say approaching it, are we approaching it from the upside coming down, or the upside going up? I'm not quite sure of.
We still have our guest on?
Well, yes. If it's approached from the upside, what would be the criteria? Or if it's approached from the downside, what would be the criteria?
Okay.
All right.
I'll hang up so I can hear your answer.
Okay.
Thank you.
All right. The first time when you're coming down to the 45, you have to also consider what is the trend of the market. You really can't go just by the angle, because if you read Gann very explicitly and insightfully, you will find out that he talks about buying always, or any of your market actions always being in the direction of the trend. And as long as you're making higher swing highs and higher swing lows, therefore your trend is up, you would buy every single time against the 45. And you'll read Gann closely, you'll say many times the stock will come and rest along the 45. And what's important is, what does it do on a closing basis rather than the intraday basis? Gann's very explicit about, and also, are you talking about on a weekly basis or on a daily basis? I'm not sure, Richard, how to answer that question.
Okay, well then we'll go right back to the phones. Maybe we'll get somebody that's more of an expert on here. He can answer it. I doubt that, though. Hello, you're on Money Talk.
Oh, hello. Arlo, thanks for another very interesting program.
Thank you.
This is Don from Stewart, Florida. Now, first of all, I fancy myself to be a technician, and I have had some luck with just simple trend lines. I'm sure you and your guests know what that is. Now, my question will sound cynical, and I wish it wouldn't. I wish I could think of another way to word it, but if I had a system that fairly consistently predicted the market, I think I would spend all my time trading rather than advising others. Now, please don't think I'm trying to be nasty.
I think I know what he's driving
Could you
at.
answer that, please?
Yeah, go ahead. Jerry, why don't you start and then we'll get Phyllis.
All right, I agree with you very much. As a matter of fact, I've taken a $58,000 portfolio and ran it into a $643,000 portfolio. And while I don't profess to give all the keys away that I've discovered, nor would I ever wish to imply that, what I would like to do is try to clarify some of the misconception that is surrounding Gann analysis. I hope that'll help you with answer your question.
Phyllis, are you rich on Gann?
Yes, I've done very well.
Yes.
I mean, no one ever says they're rich, right? But
no way to get
one of the things that I happen to be an Aquarian.
Yeah.
And Aquarians love to communicate knowledge to other people. And I feel good in writing a newsletter and in giving these once-a-year seminars that I do. Just as in Gann's day, he wasn't willing to share until he mellowed. And then you realize that out of gratitude for the legacy of knowledge that he left, that there's a great deal of inner pleasure in organizing and applying the materials and then communicating that knowledge to others.
Sure.
This is my peculiarity.
Okay, back to the phones. Hello, you're on Money Talk.
How you doing? My name is George. My question is, according to Gann, when will the next bull move begin in the grains, specifically soybeans, including starting price, and how far will they go in terms of price and time?
Well, I'd love to answer that one. Do you mind, Jerry?
Not at all. I don't know what it is.
Well, we had a major high in soybeans in 1980. And one of the things that Gann says about bear markets is 2 years down, 1 year up, and 2 years down. And so far, the soybean market has been working perfectly on that. We had 2 years down from the November high in 80 to the low in October of 82. We then had 11 months up. Gann says watch for a change in the 11th month. And we've started down, so that our low is the lowest low is probably not due until August or September of 85. But in between there can certainly be some very, very profitable trades on the long side. The lows could be all the way down to $4.50 by next October. That's the bad news. But in between, there'll be some good moves in both directions.
Okay, I guess we have time for another call here. Hello, you're on Money Talk. No, we don't. My producer just told us we don't, so we're going to go into a little break. We'll be back in a very few moments, so stay tuned. We're back here now on Money Talk and a discussion of the Gann theory with Phyllis Kahn and with Dr. Jerome Baumring. Hello, you're on Money Talk.
Hello?
Yes. Yes.
Hello?
Yes. What is your name, please?
Yeah, my name is Mohan.
Yes.
I'm calling from New York. Mr. Silverberg, first I should congratulate you on your excellent program.
Thank you very much. Send a letter to my boss.
Yeah, I have a question for your
Please go ahead.
guest. What is his outlook on the gold for next few months, and how can you profit? What is the way of investment he proposes to get the maximum yield on your investment?
Okay, good question. We haven't talked about gold yet.
You want to go?
Well, if you want to stay strictly in conformity, right now the trend has been down in gold since January the 20th of 1980. And without trying to pick bottoms and trying to look like a hero, all you have to do is simply keep shorting the metals until you get a bottom put in. And then on the second higher bottom, which Gann would say is a safer buying level, I would then become aggressive on gold. And right now, the biggest money will be made on the short side of gold. Until you have any indications, I'd have to say I'd have to be short the metals, and I'd especially be looking for around 290 and as possibly as low as 250 in gold.
That much. How about silver?
On silver, well, I think you might have a rally coming out of the $6 area, and that could be a very explosive rally back as high as even $14 to $15. But then watch out, people. the bottom comes, and it could be as low as 375.
Phyllis, you going to agree with that?
Well, I certainly do in general terms. I've spent a lot of time analyzing the monthly London gold fix prices, and I forecast last February that London gold could come down as low as 210 by December 84 or January of 85. There's a very definite 120-month cycle there, and we're in the second 10, which is 10 years, and we're in the second half of that 10-year cycle. And so that we're due for a low to occur now in a secular bear market that should last for about 20 months and then down for the rest of the decade. This is the analysis I've come up with.
I wonder if the Aiden sisters are watching.
I wonder.
They're the gold bulls, as our viewers know. Hello, you're on Money Talk. Hello?
Hello?
Yes.
This is Joy from Riceville Beach, North Carolina.
Yeah, hi, Joy.
Hi. I have a couple of questions for Phyllis.
Okay.
I noticed that she mentioned she was was an Aquarian, and I'm a Sagittarian with Aquarian rising, and I'm wondering if she has any insight on that. I'm a technical analyst myself. I have employed the Elliott wave theory with Fibonacci numbers and recently have gotten into the Gann work. I have charted the pork bellies and with the Gann angles successfully plotted the 5-week up move that we had. Was very tickled over that. We have hit a high, which was around 74.90, just under or right on an 8 point.
Right.
Now, moving back down, I see support levels. My RSI, which had hit the upper end of the angle, on the last up move was slightly under the angle. In interpreting these Gann angles, am I to think that we are in a corrective portion of what seems to be a bear trend on the RSI, or have we actually reversed the trend on the pork bellies?
Well, at this point, I can't talk about trends on the RSI because, you know, that's not part of the analysis I do. But the high that we made at the 74.90 level last week was up against old highs, and certainly Gann says sell against old highs on the weekly or the monthly. It remains to be seen the extent of the drop if this is going to end the uptrend, but until it does, the uptrend is still intact, so we just have to monitor the extent of the drop, and if it exceeds past corrections in price and time, then we can look for the longer trend to have changed. But right now, it's too early to say. It's a good start, though, on the shorts.
Okay, let's take another call here. Hello, you're on Money Talk.
Hi, this is Mildred, Margaret rather, in Florida.
Yes.
I could be wrong, but I seem to remember Phyllis in an earlier broadcast mentioned that we were at a turning point in sugar. Just keeps going down. I haven't checked it today, and I didn't hear Phyllis's earlier broadcast, and she may have mentioned sugar. So I would like either of your guests' opinion on this market.
Well, I would like to quickly say you did not hear me at any time make any recommendation on sugar at all. The cycles in sugar are very long, and I think all of the excitement about sugar being at 5 cents and at such a low level, sugar can go to 2 cents. So I don't see any reason for it to be either long or short in the sugar market, and I have no recommendations there whatsoever. So you were thinking of someone else. Have you got any comments, Jerry? Because
on the sugar market, if you look at sugar and you go back to, I believe it's around 63, 64, you'll find out that March sugar put in the low at $1.23. And if you look going back how long sugar takes, and you'll find out that the next decent-sized move in sugar to the upside isn't anywhere near, or I say at least 4 to 5 years hence. And employing Gann technique, it's never too low to sell. And when the trend is down, you always stay with the trend, and I'd be selling all reaction potentials until you have a definite indication of the lows been put in.
Okay, folks, no sugar. Let's take another call here. Hello, you're on Money Talk.
Yeah, this is Craig from Philadelphia.
Yes, Craig.
My question is to Phyllis. Earlier on the broadcast, Phyllis, you mentioned that the Dow, according to Gann, should go down to the 1030 to 1080 level in February or March in that time frame of 85.
Right.
And my question is, what does Gann say about the upside? What's the maximum we could see in the Dow between now and then? in Gann analysis?
Well, the only way I can answer this is that I agree with Jerry's earlier statement that the low that we're working off of is the 1974 low. And there has to be some proof that the rise from 1982 to 83/84 was not a final top. This has to be proved. When you look at the S&P or the value line indexes, there is a chance, again, the markets have to prove it, but there's a chance that that was the final leg up in the market, and that we'll do no more than come up maybe by 20 or 30 points and take out the highs that the Dow made, and then we could go into a horrendous bear market. But until the market proves it, we just have to wait it out. So I don't have any expectations of it going higher than the 1297 in the next 6 months.
Well, Phyllis, if I can take a moment, Gann said very clearly that after final top is made and you have a sharp decline, you have a secondary reaction that occurs. Well, I believe that the reaction we've just seen from 1080 to the 1260 level would definitely qualify as a secondary reaction going on. And since you made a lower top, for right now at least, you'd have to give the benefit of the doubt to the downside.
Jerry, I'm going to have to interrupt you to do some business here. We'll just continue this discussion in a very few moments, so stay tuned here on FNN. All right, we're back now on Money Talk for kind of a summation here. Our guests are Dr. Jerome Baumring. He is partner in the Investment Center. That's a Los Angeles area bookstore that specializes in investment books. And we have Phyllis Kahn also, who's an expert in Gann theory that we've been discussing here for an hour. And Jerry, you say that he wrote 5 books. Are there any popular editions of them or what?
Yes, there is. Right now, currently on the market, you will have Billy Jones's reprint of Truth of the Stock Tape, 45 Years in Wall Street, and How to Make Profits in Commodities. I might add, in 45 Years in Wall Street, that there's 2 books combined in one. Mm-hmm. The Wall Street the New Stock Trend Detector is also part of 45 Years in Wall Street. It is 2 books that have been combined into one.
Yeah. You've got some first edition signed books. What do you take for them?
Not for sale, Arlo.
Not for sale. Okay, Phyllis, how many Gann theory experts are there? Do you really know?
It's really hard to say because there are many people who are trading today who learned about Gann from Gann, who are students of his. And many of these people, after they learned his methods, have never worked again. And they're just quietly trading in a non-visible way. Mm-hmm. Then there are some visible people, Jerry and myself and a few others. But as far as the universe of traders, there are very few.
Okay. Jerry, you said you wouldn't take any amount of money for your first edition signed. How many are there on the earth?
All right, now, you have to realize that when Gann publishes his own books,
yeah.
So that when you say, how many are there, there's no way of really knowing. But I would have guessed only the fact that you're talking about the first work being done in 1923, maybe 5,000 would be a large number,
right,
based on that era. Then his next work done in 1930, the Wall Street Stock Selector, again, 5,000 to 6,000 copies. His next work done in 1939, the New Stock Trend Detector, maybe 10,000 issues. And then his 1941 original, How to Make Profits in Commodities, maybe 20,000. Mm-hmm. So how many have survived this time? I would say probably a number in the hundreds.
Certainly very rare books.
To say the least.
Mm-hmm.
And that in the original books, there's nothing different that's been added or subtracted from in the reprint. So you're not getting anything less. Only from a collector's point of view is the value of the first edition. That's something that should be stressed. A first edition is like any antique. Its value is in its antiquity. However, for the information, the reprints contain everything that you'll find in the original issue.
Okay, we got a couple minutes left. Let's kind of sum up here. Phyllis, we've said this before, but maybe we can for viewers that have just come in. What does Mr. Gann tell you about the future of the stock market right now? Stock market and precious metals. Let's take those 2.
All right. On the very near term, the stock market will probably make another leg down and bottom out around Christmas for the traditional Christmas rally. Another brief rally, and then in February or March is when the more important cycles are due. And by then we could easily be at that 1080 to 1030 level that we discussed.
So down.
That's the stock market. So overall, right now, the trend is down, yes. The precious metals, as we discussed earlier, there are some major cycles through the long-term cycles that I've studied that indicate between December 21st and January 21st, we could indeed have a 60-month low.
And Jerry, you're just about in agreement here, aren't you?
Very much so, except one thing that I think should be brought forward. There's always cross currents in the market. Well, not all stocks go down just because the Dow's going down. Many times stocks will be going up, counter-cyclical to the Dow going down. In the 1929 top, after the majority of stocks had topped out or were heading down, you had many, many stocks, gold stocks, that went on to new highs, and those were the laggards of the bull market that had expired in 29. So that one thing everybody should understand is that while the Dow might be going down, I wouldn't sell out of stocks I owned unless I had a very good reason, and I don't mean just emotionally, unless the trend of the stocks turned from an uptrend to a downtrend.
And Phyllis, we only have 30 seconds. I guess you wouldn't disagree with that.
No, I wouldn't at all, because individual stocks, as opposed to the indexes themselves, can be quite different. That's why now trading the futures indexes, you don't have to, the indices make it easy for you not to have to select a stock.
Okay, we have to go off on that. Phyllis, Jerry, we thank you very much. Talking about, I'll call it an esoteric theory. Maybe it's not to you. We have been talking about Gann theory. Our guests have been Dr. Jerome Baumring. He's a partner in the investment center, a bookstore in L.A., and Phyllis Kahn, who is a Gann theory analyst. And join us tomorrow, please.